My guest today is Andrew Keene, and we're talking about how you play earnings with options. So Andrew, talk about that. Earnings are always a lot of activity going on. How do you use options with that?
Yeah, I love trading earnings. It's actually one of my bread and butter and specialties. So basically what I do, I want to trade weeklies if possible. I want to trade the catalyst, and then I want the position to be over. However, not every stock has weeklies. If that stock is not that active or it's a little more liquid, I might have to play the whole month. But if there's weeklies, there's probably around 120 stocks that have weeklies. I want to play the weeklies, get the catalyst over. And then I do a very similar trade than I talk about when I unusual option activity. Basically, I look at the historical movement, how much the stock has moved over the last 4 quarters. You know, if the stock has sold off 4 times on earnings, I think there's a better chance next time it's going to sell off. Then I look at the implied volatility. So I use historical volatility, implied volatility. How much are the options implying it's going to move? Then I have my measured move target. I look at the at-the-money straddle, and I make a measured move target to the upside and to the downside. Then I look at the chart. How does it chart? Is it bullish? Is it bearish? Resistance, support, moving averages, volume, and I look at that to see how I line up for a trade. Where do I think the stock's going to go? Then I place a trade on this. I'm a big spread trader. You know, I do some credit spreads, I have some butterflies, condors, call spreads. Sometimes I do outright calls. I place a trade based on that on a nice risk versus reward setup. Every trade is different. Sometimes I'm risking a little bit more, sometimes my reward's a little bit more, but I always have something set up for the catastrophic to happen. CMG goes down $100, I don't blow out my account. So I set up a risk reward scenario, and then I have basically the same thing as before. You know, I have my break even, want to know where it's break even, resistance, support, moving average, and my time and target. Like I said, if I'm playing earnings, I want to play the catalyst and be over with. I don't want to trade the overall market. So I would love to play the weeklies. If there was weeklies in every stock, I'd trade weeklies in every stock, and then I have a target of where I think the stock's going to go.
All right, so are you playing these options trades into earnings and then getting rid of it right before, or actually over earnings itself?
It depends on how it is. Usually what I do, I put a lot of my earnings trades on about 10 minutes right before earnings. A stock like Apple, Google, Amazon, they move so much on an intraday basis. I want to know exactly where it is right before the news comes out, and I use this at-the-money straddle as a measure move target of where it does. A lot of times I like to trade call flies and put flies. I've been trading Apple for 6 years. Apple has moved 6.5% exactly 5 straight quarters. So I can make a call or put fly based on it. Before I go into any trade, I know when I'm taking it off. So a call and a put fly, I'll take off half my position at a double, and then I leave the other half on until expiration. If it's a condor, usually I'm leaving it on until expiration. So it just depends on my strategy type, but I always, before going in, I know my risk, I know my reward, and I know where I want to get out of it.
It sounds like you've got a checklist, and you just go down this checklist, and before you make any trade, everything has to be checked off.
It's called the Cribbit trading plan, actually. So it's historical volatility, implied volatility, measured move target, chart, risk, reward, break even, and then time and target. So it is literally a checklist.
I know our viewers are going to ask me again. Say that again, what it is.
Cribbit.
Cribbit, okay.
H is historical movement, historical volatility or historical movement. I is implied volatility or an implied movement. M is my measured move target, up or down. I use the at-the-money straddle to get it. And then I have my chart. Is the chart bullish or bearish? You know, how does it look? Then I'd look at my risk, my reward, because every single trade I make, I currently have 60 positions on. I always want to have a risk reward setup, break even, and then I have TNT, time, target.
Andrew, thanks for your time.
Thanks for having me on.
You're watching the MoneyShow.com video network.